Hello, thank you, Scott. Hello, Andy.
Hey, Steve. Hey, Scott. Hello, everybody.
All right, thanks for showing up. Senator, in general. No, I'm sorry. I've been watching way too much of this C-SPAN Mark Zuckerberg stuff. I gotta turn this off before it drives me crazy. Because that's how he answers every question. All right.
Mm-hmm.
Hey, everybody. Welcome to Trade of the Week, April 10th. Typical Tuesday after the market. Back at full staff. We had Jamie and myself yesterday doing the Monday webinar, and Andy's going to help me out here today, Trade of the Week. So let's get started. All right, the disclaimer that we've always heard but have to read through is that you guys recognize we're just going to show some content, talk about the product a little bit, talk about a few trade concepts, but none of this should be considered as investment advice. If you need some investment advice, you've got to seek out the guys that are, authorized and licensed to do so. So anything you see in here in this webinar, please do not misconstrue as investment advice. We're just talking about the software and taking a look at some charts. All right, the You're Not Alone with Trade Ideas slide is ubiquitous. Every week we've got to remind everybody, especially the newer people, that customer service is a top priority for us. We recognize that this platform is in depth and has got a lot going on in the 14 years that it's been in development. And so it's not the kind of thing that you can just jump in and drive 120 miles an hour with. There's a lot of things to learn. And so we do these afternoon webinars. We do the Friday support session down here. It's come one, come all. It's in the same webinar email list. So if you have any questions and you want to come in and do some more interactive stuff and maybe get some answers to some things you don't know about, best place to do that is the Friday support sessions. Otherwise, we have the afternoon webinars that are more topically oriented, like today's. We used to do one-on-ones, but we're growing too quickly, and it's no longer an efficient use of anybody's time. So we've gone to the Trade Ideas University system. I think we're on our 4th week now doing that as we phase out the one-on-ones, and we've had really good feedback from that. We all kind of take the turn, myself, Jamie, Andy, Sean, splitting up the week with different content. And it's been a pretty good success so far. A lot of the comments we're getting back are definitely in the affirmative, because it's the same thing. It's live, and if somebody has a question on some of the topics we go over, we can go over it right there with them. So, as Jamie pointed out in yesterday's webinar, we do 9 scheduled webinars a week now, 4 Monday through Thursday in the morning during market hours, including the Friday support session, and then the 4 after market hours, as we are doing right now. Not even to forget, we would be remiss to mention this right-hand side of the slide. Here's Barry Anderson's room. Does a great job of moderating hundreds of people in a live trading room, using the Trade Ideas software, helping people out with simple questions. But aside from Barry, there's a lot of good traders in there as well that join the fray and kind of help keep people focused on where the action is. So it's a great place to be, and free is certainly a great price. I think there's a lot of chat rooms out there who wish that they could compete with free, but they cannot. Oops, wrong direction. And because of that, our continued growth is in a parabolic state. Moving forward, thanking you all for your dedication and support of Trade Ideas. The Brokerage Plus slide, this is again a reminder for advanced, intermediate, advanced users. If you're a newbie to trading, please don't even try and think about this. This is something that is able to connect Trade Ideas custom scans that you build yourself, and you can directly connect to interactive brokers using our connection that we call Brokerage Plus. But you've got to have an IB account, and you have to have a Trade Ideas premium account to have access to the Brokerage Plus auto trading module. So for more information on that, you can always go to this URL down here, /download, or info@trade-ideas.com. Just put in the message header, Brokerage Plus questions. So man and machine combined. I keep this slide in here every week to remind us that we are the humans, we are the ultimate decision makers, and we hold the discretionary cards. But it's nice to have a machine on our side as well, and that's Trade Ideas scans, custom scans, and also the AI Holly. And so the quote is, no man is better than a machine, and no machine is better than a man with a machine, or in our case, a human or a trader with a machine. Paul Tudor Jones, smart guy. So did I put in 11th? That shouldn't be 11th. That should be April 10th, right, Andy? What am I doing? Getting ahead of myself here.
Yes, it is the 10th. I'm not sure how that got there.
Oh, back arrow is my favorite button. There we go. All right. So today we're going to go over the market recap. Boy, what a news-driven, volatile market we have right now. It's kind of like Class 4 Rapids trying to negotiate this stuff. We'll go over the Holly recap, the trade of the week. We'll talk about how it didn't trigger, but how we picked it and what we still might want to keep an eye on. I'm going to revisit the compare count window again and show you how I was using that and how it kind of gave you some clues today and yesterday. And then it's time to optimize one of the simple scans we have. So we'll go ahead and do some optimizing. And if we get something that we like, well, of course, I'll certainly share out the cloud link at the end of this when it all makes sense to everybody. And then, of course, chart requests. If we have some time, we can do three or four or five chart requests. It's always nice to let Andy and myself put a second pair of eyes on charts that you're looking at. So when we get to that point, we'll let you know. So let's go ahead and minimize that and go right into the market recap. And we always want to start with the S&P. And basically, you look at this juxtaposition right down the middle here, and we have a tale of two markets. Last year, just buy the dip, everything's fine, low volatility, small candles, move higher. And then we move into this territory. High volume, volatility sell-offs, giant down days, giant bounces, news-related items overnight driving the futures. I mean, just, to put it in perspective, here's the Friday candle, okay? We went into Friday with a lot of fear that we were going to go into a trade war with China. And then Sunday night, the futures gap back up as China says, oh, sure, we're fine. We'll take your cars. We'll go for fair trade. We like that. And so the market got happy again. And then yesterday, right smack in the middle of the day, we had some buying here, and I'll talk about this a little bit. And then we find out the FBI is raiding Trump Tower. And so, what we have, guys, is a market that's just waiting on pins and needles for the next bit of news dump, which ultimately in the end doesn't really seem to matter anyway. But it's giving us long volatility candles and a lot of volatility, for lack of a better word. So all we can do is try and do our best and judge, what we've got down here. And the main idea, for the most part, let me declutter this up just a little bit here. Is this 200-day moving average, which I brought in last week, because that seems to be what the S&P 500, which is the market benchmark bellwether, is focused on. We've beat on this thing a couple times, once back here and then a few times recently in the past week. Actually closed below it, but only to find some, I can't even recall anymore, some good news overnight, which gapped us back up and back above the 200-day. Well, then we go into Friday. It's looking bad again with trade war talk, ending on a what I was calling at the time kind of an island reversal here. And I'm still keeping an eye on that. And we come in last night, and obviously more good news in terms of what was happening in the overnight futures market. For whatever reason, we gapped back up again today. A lot of overnight action. It's makes it tough to handicap between the bells in the general market. So that's what we've got. The Qs, NASDAQ did not even get close to coming back and retesting its 200-day. So it's trying to bounce higher, but we're just really in this little fist here of congestion. I think, looking at this level high back here, if I just draw that line in the NASDAQ, it's kind of where we got hung up today. That day, 3 days ago, and then today. This seems to be the upside level, and look how it kind of also corresponds to this level back here, acting as prior support. Today was definitely a win for the bulls because we got a gap up and we got a green candle and we closed in the higher end of our recent range here. But the bad news is there's still these declining moving averages, which are going to be, acting like nets almost. Matter of fact, you can see the S&P got kind of hung up there in the declining 10-period moving average today. Back to the NASDAQ. seems to be having trouble with this level as it is based on prior resistance and support, with also the declining 20 period coming down to match it. Dow is probably looking the better of the two that I just looked at because they've been able to post a close above their declining 20-day, and the Dow has not really flirted with that 200-day average as much as the S&P has. But again, the S&P 500 is much more the bellwether benchmark than the Dow is these days. And then lastly, IWM, trying to fight through all of its moving averages. So it's definitely hanging on too with a bounce above the 200. So I think what it would take to get me more excited about the market and get out of the up, down chutes and ladders, what's the next overnight news dump going to be? Because that's pretty much what the market's been trading on. It technically is, can the S&P get back and close above this declining 50-day? If it can do that this week, then bravo, golf clap to the bulls for sure. Didn't see that coming. But again, this has been a pretty tricky couple of weeks here. That's really all I'm kind of seeing at the moment. Again, tale of two markets. Back here last year, moving averages fanned out to the upside. Moving averages supporting price and bouncing them back up, whereas here we've had the moving averages declining and fanned out, and a few times they've kicked the price back down. So that's really what I'm going to focus on, probably that declining 50-period moving average in each of these individual ETFs to see if the coast is clear. You're going to have to get back above these declining moving averages. Kind of rambling there a little bit, Mr. Andy. Any thoughts you want to add or color?
Yeah, I just discovered a new pattern. Put it back on the spiders, man.
You discovered a new pattern.
It's the roller coaster pattern. See that? In January, the roller coaster is going up real slow, and then it gets to the top, and then then you have these crazy action, man. So there's your roller coaster.
Stronger than greed. That's what that shows.
Small humps after the big drop, and then back down.
Yeah.
Anyway,
it's not been easy.
We're right in the middle of it's just kind of no man's land, pinned between a couple of David, like the screen machine. It's
I call it chutes and ladders.
Chutes and ladders. That's a good one. But looking at that move higher in January, but that's like a roller coaster going up, and it gets to the top and goes straight down, and it
Release
comes
the
back
ebook.
and takes a
Yeah.
There you go.
So
but
if you guys,
we're kind of in no man's land.
I'll go ahead and just.
You're right. It's totally news driven right now. It's a great time to sit on your hands if you can't afford to.
Well, this
if you're like me in my 20 years, trade, I felt like when you're making money off the market, that's your means of living. It's hard to sit on your hands because you feel like you always got to be in there punching away. But once again, it's a tough market.
This is Scott will talk about this, or I'll talk about it, one of us, towards the end of the ebook that we have out. It's what to do in the post-buy the dip market. And I really just got to pat ourselves on the back for our timing of that. We came up with this content back around here, and by the time we got it out and released, it was pretty good timing in terms of at least what we've seen in the charts. But a news-driven volatile market, one of the ways you can combat that is smaller trade frequency and definitely smaller size, because you can get movements that you took a lot more shares to get back here when we were climbing the roller coaster. Now you can go half share size and let the volatility work around you a little bit and try and have some staying power in this volatile back and forthness. But I still feel we're just right back in the middle of this range here. We're either going to break this 200 or we're going to pop back above these declining moving averages. And that's about as simple as I think I can make it for the bigger picture there. All right, so that was the market recap. Thank you for your help. And where are we going next here? We're going to go into a Holly recap. All right. Coming into today, I noticed we had 3 longs and 3 shorts. I noticed that we had a directional bias. I've got my trades there triggered, sorted by time today. So what happened was, this works well having the market up here. Here's our open, here's the gap up, and then 30 minutes of sell, and then we basically got some buoyancy to the market, and that dip was bought, and we closed at or closed near highs. But look at what the directional bias was kind of showing us here. The first 4 trades out of the block, 15 minutes after the open to 30 minutes after the open, were predicated on the fact that market gapped up and the gap was slowly starting to close in. So for whatever reason, those particular short strategies were triggered by the AI, and then the directional buys just flipped, just turned on a dime, and went long for the remainder of the day. So that's one of my higher views. As far as the risk on and risk off, we just didn't have a whole lot here to work with today. I think the volatility is probably catching up. We had a couple of good days in Holly, but today was kind of a clunker, for lack of a better description. Going into the end was really, really interesting. We had a nice risk on profit, just under $2, and within 30 minutes, the market didn't do much here in terms of selling off. But boy, did the longs sure deteriorate going into the close.
And you know what?
Go ahead.
Stock played the biggest portion of that. We had double entries in J, that J, what is it, UNE or something like that?
Look at that, you're right.
Yeah. We had double entries in that. So when that sold off, we got killed on risk on like twice, and that was a huge move.
That's what happened. I couldn't quite put my finger on it.
Double, like I said, it was one earlier, and then also a power hour long as well. So that hurt.
Yeah, interesting. The power hour longs, they came out.
At the bottom.
Yeah, the power hour longs were kind of disappointing. They came out about 4 or 5 of them as the market was, doing well into the close, and then just a little bit of 15-minute candle red ticks here kind of brought everything down to a close. I've got a little bit to talk about at some point on this compare account window, but I want to at least let Andy weigh in on anything else that he saw or noticed that's worthy to discuss today on Holly.
You know what? There was there's a couple of good trades in there, and there's a couple of bad ones. So I don't want to break down each individual trade, but guys, you've seen this before, and it always comes with a warning. All right, when you, for some reason, it throws off a lot of our daily setups, and when you get the big gap up in the market, okay, and remember how we're always telling you this is machine and man working together, and I think Steve may have a little bit more to elaborate on this. Maybe sure. I'm not sure if it's in this one he's going to do it, but he plans to do it here in the near future. But once again, so guys, when Holly does not have her best days on big gap ups in the marketplace, and let's face it, I mean, look where we closed versus where we opened. It wasn't that far apart. We had a big gap up, and yeah, we just closed a couple of about 50 or 60 cents higher than where we opened in the spider. So a lot of back and forth action. Holly was swinging away, but yeah, it's just once again, man with machine. So when you see these huge gap ups,
we have to have our own discretion. I bet if you took myself and Jamie and Dan and Brad and everybody that's familiar with the tool Holly and said, what's the worst market scenario that usually creates the worst results by the end of the day? And if you took us individually and we didn't compare notes ahead of time, we would all tell you the same thing. Gap ups. Gap ups seem to be difficult. They're even difficult for the average trader. Are we going to fill the gap, or are we going to turn and run to highs? We never really quite know. And it's probably, might as well just, talk about it. I had an analogy I thought about over the weekend for artificial intelligence and how it relates to how we use it here. We're using it in a financial market setting. So therefore, the AI's job with machine learning every evening is to present to us a handful of ideas that are statistically probable for success. Well, let's change departments here a little bit. And everybody's heard of IBM Watson. And if you're not familiar with this, I'm going to just give you a little background on what they've been doing with IBM Watson as it pertains to the healthcare industry. So Watson learned how to read medical journals and then went on to oncology journals. And the IBM crew brought Watson to this oncology department, and I don't recall what hospital it was, and talked to the director and said, we would like to have our AI Watson dig through all the data that your researchers are digging through and come back with some suggested treatments, because every cancer patient's different, their DNA sequence is different, and these cancer researchers are going through line by line, just like we would backtest, optimize backtest, and looking through and coming up with an idea or a report generated as to, based on what the patient's data was in DNA sequence, these 2 or 3 or 4 possible treatments for this person's unique cancer might be advisable. Well, it takes it took his oncology department 2 or 3 months to come up with those type of findings, whereas Watson came up with them just in a few days. And he was very skeptical of this oncology director, and he looked at the results and he gave the results to his team, and his team was just ecstatic with the results that came back. They're like, wow, I never probably would have caught this, but I see what the machine caught here. And so what the machine, Watson, was doing was presenting these researchers with a nice, small, curated list of treatments based on all of the information that the AI took into consideration, which typically would take these researchers 2 or 3 weeks. So the point I'm trying to drive home here is Watson is not giving these oncology researchers a list of treatments. In other words, Watson is not delivering a list of treatments to a bunch of brand new medical students and saying, hey, this is great. This is how you treat cancer. Awesome. You get this and you get that and everything's going to be fine. No, this is a group of seasoned researchers that have spent their obligatory 10,000 hours in their field so that they can take that data from the AI and put it to good use. And that is a full circle definition of what we talk a lot about on that slide. Man and machine working together is better than a man with no machine. And so just as a big overview, Holly's going to have good days, Holly's going to have bad days, but what it's doing is the same thing Watson was doing for the oncology researchers, Holly's doing for us traders. And what I'm saying by that is you can't take every single trade that comes through and trigger that comes through as the gospel and expect to be rich beyond your wildest dreams. You've got to run it through your own parameters and your own discretionary filters and see and trade and act on what makes sense to you. So that was kind of a little sermon I've been holding on to as far as it relates to the AI and what the expectations are. And again, to summarize, the machine learning gives us a nice curated list of which we still have to use our brains and our experience and our discretion to take to the next step. And that's how we view Holly here. Yeah, I'm reading your comment there, David. After reading some oncologists and their departments tried Watson and then rejected it, apparently they just disagreed with it and were offended or something like that. Yeah, there may have been some people that weren't buying that, but the oncology director of that department, from what I read, he said, I am sold. This is going to save my people a lot of money in doing homework, and it's going to deliver them high quality opportunities to help save these patients, but still it's up to them to make those decisions based on their knowledge and their skill set. So I just felt that was, kind of an applicable analogy to, AI in healthcare, versus how AI in finance is working. All righty. So with that said, where are we going to go next? Trade of the week. All right. Trade of the week did not trigger, much like last week's trade of the week. Now, guys, we came in here and the first thing Andy and I said to you is this market is dastardly. It is full of news, gaps, shoots, ladders, volatility, etc. So what we're not going to try and do is just get something to trigger for the sake of triggering. So I'm going back to last week. GE is still not doing what we kind of thought it might have done last week, but that doesn't mean that if the market does recover and gets its footing this week, this price alert is still in effect, and I still will take a very hard look at this if it triggers on a good day this week. So, even though the trade of the week technically expired last week, I would still keep this one on your radar. The week before that, ABX has given us no reason to really fret. It's just testing our patience, which, as I've said many times, patience is really the virtue you're going to want as a swing trader, because if you don't have it, you're going to start, getting frustrated, impatient, talking yourself out of good trades for no good reason, only because you're either frustrated or you don't want to watch it anymore. But ABX basically closed above a declining 50 moving average here for the first time in a while. And definitely for the first time since it was called as the trade of the week back here. So it's just been kind of biding its time, a little cup and handle, little, consolidation and push higher. We'll see what happens, but that's a nice technical move for ABX to be back in the money here and closing above the declining 50-day moving average. Now this week, obviously, is a little different. Again, well, let me just go back to, I never really want to focus on the ETF, but I like to focus on the source of the ETF, which is the S&P 500. And what we had last Friday, if I can scroll back just a little bit, we had a lot of selling last Friday. A lot of selling, and then right into the close right here, we bounced right up into the weekend. right here. And then as you can see, we did wind up gapping up after the Sunday night. But with this bounce going into the weekend and this heavy sell-off, you know, we were looking pretty ugly here on the daily chart. It's this candle right here. It pierced the 200, but bounced just above it to try and hold. We looked for some long stock equities plays. Didn't really see anything that jumped off the page that was interesting. And considering that GE was there, not triggered, but working, and ABX was working to the long side, and we couldn't find anything to the downside, well, what we did find was this right here. This is the what we call bullish candlestick patterns. And Andy and myself have both gone over how to find some of these bullish candlestick patterns in the symbol list under the daily menu expansion tab. And typically we're going to see stocks in here. This is a scan that was looking for bullish candlestick patterns. And everything that was coming through here, take a look, guys. There's our trade of the week: SPXU, VXX, TVIX, UXVY, VXX again, TZA. These are all let me rephrase that. These are all inverted ETFs, meaning when they look good, that means the stocks and the market's looking bad. And so we really didn't see anything other than just a bunch of cautionary symbols coming through here. And we decided, all right, well, we're going to try it again. It may not trigger, and that's okay. If it doesn't trigger, no harm, no foul. But if it does, we want to get a running head start on this bottom little tick down here, which the swing stop has so easily identified. This is Friday's low right there. So going back to my 15-minute chart with this Friday low, that's essentially the low in the S&Ps, that if this Friday low gets taken out, the SPXU is going to trigger. And what is the XPSU going to do for us if it triggers? It's going to move 3 times as fast in the opposite direction as the S&P. So that's this line up here. It's the exact inverse of what I was just typing. There's the S&P, there's the low on Friday with the orange line, and that's our trigger for the remainder of this week. If XP falls below that line, you can be darn sure that SPXU is going to be above this blue line here, because this is basically the reversal that we had on Friday. Couple of things. It's very hard to look at a triple inverted ETF like this and start marking up levels of interest on the daily chart, because they're not really true. You know, these inverted ETFs, they have to reset every evening, and that starts to create something called decay. And decay is not really something that we want to mess with when we want to be precise with our charts. So that's why I was showing you it all starts and it's all predicated from the SPY. If we can get a running start and take out Friday's low right there at that orange line, I have a pretty good feeling there's going to be some follow through. And if somebody wanted to participate on the short side in the market, if we get that, that would be your entry point right there. So I thought that was interesting when I noticed, what was it? Yes, Amazon, excuse me, I'm talking out loud. Amazon's really struggling here. Just as an individual aside, all the other ones had an easy time getting back above their declining 10-day. Well, Amazon did it today, but it did it with a lot of protests, let's just call it. Look at the last 3 days, how this declining 10-period average has been holding on to the price of Amazon. So, you know, back to the S&P, we're not out of the woods yet. We're still in this fist of back and forth, you know, green and red candles. But if the market does decide to move higher, then the trade of the week is no harm, no foul. Again, we're not trying to just get something to trigger for the sake of it triggering. You know, we're trying to have some caution and try to explain, you know, the cautionary steps that we're going through right now as we look for trades of the week, and the market is so darn volatile. Anything else I'm forgetting here, Andy?
No, very good. And honestly, guys, a lot of people may think, oh, well, great, you had 2 trades of the week that didn't trigger here in 2 days. I can't tell you that can really help you. I mean, it's better than forcing a trade. Once again, time that you might want to sit on your hands. You know, big up gaps, big down gaps, a lot of back and forth action in no man's land. There's a lot of reason right now, not just to be trading, especially, you know, swing trading. So no, I have no problem at all with the trade of the week.
Yeah, when does swing trading get tough? Well, it was a lot easier last year back here. Yep. But swing trading gets tough when the markets overnight are 24/7 and the futures are hanging on every breath of every politician and world leader going on right now. You know, you could be looking really pretty. Like yesterday, I was talking pretty confidently that we were probably going to see a trigger today based on yesterday's candle.
Mm-hmm.
I'll show the intraday here in a second, but look at the giant wick on that.
Yeah.
That's just one big giant intraday reversal wick. And
Yeah.
why did it happen? Because we were told in the middle of the day that Trump Towers was being raided by the FBI. I don't know what that has to do with anything in the markets, but it spooked the markets, and we sold off hard and gave most of yesterday back. Um, so bottom line is swing trading's tough right now. And to go back to what Andy said, there's no reason to force trades into people. Careful what you wish for sometimes. Cash can be a position. Sometimes when we look back in hindsight in history, the things that didn't happen to us can be the blessings. But anyway, I digress. I want to quickly talk about this guy here. I've talked about it before. It's a compare account window I've been using lately. A lot of you might be familiar with what Jamie does. He has 4 of them, but he's got them all segmented on market cap. He's got one with super low cap all the way up to the bigger market cap, and he's trying to get some extra feels or inputs as to what the institutions might be doing. What kind of mood are they in, a buy or a sell mood? Well, what I did, and if you're not aware, you can do it. You launch a compare account window from scratch, and basically you get the config window. If you just click OK, you're getting nothing but every new high in the market versus every new low, which is interesting. But I wanted to say to myself, I want to use this window to only monitor stocks that are the MOMO stocks, the momentum stocks, the ones moving quickly in either direction with high volume to the upside or the downside. Because I could sit here and I could scroll back and I could see green, 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 yellow, green, yellow, yellow, green, and it becomes kind of hard to figure out exactly what the flavor of the day is in terms of what are the Momo guys doing. Well, there's a tale of two stories here. This was today, and believe it or not, this morning it was extremely bullish. It was like almost 80% bullish and 20% red, meaning that everything that was coming through, and I'll elaborate on that in a second, the extreme volume high-low pro was being cataloged on this compare account window to show me how many new highs versus new lows when it comes to the Momo stocks. And so this morning, even though we had a little bit of a gap up and a sell-off, there was a lot of Momo stocks moving to the upside. We had a big, solid green, barrel there, cylinder for the most part. And then as the day went on, a little bit more red started to creep in, and then so on. Yesterday was interesting, and unfortunately I don't have an example to show you, but yesterday my compare account window in the same respect, here we opened yesterday and then we took out highs and we made another high. I look over at this thing and it was mostly red. It was like 70% red and 30% green. It was completely diametrically opposed to what the chart was showing me for the S&P. And I thought, well, that was interesting. But I think what it really told me in the end was that, these stocks making new highs were kind of doing so on a hair trigger, and they weren't really telling the whole story here looking at the S&P, because by the end of the day came, some out of the blue wacky news comes, and the market all of a sudden kind of showed its true colors. But yesterday was interesting. It wasn't like today. Today was much more biased to the bullish side, and we closed rather strong. But yesterday, even in the mornings, we were making new highs. This thing was giving me really conflicting signals with so much red on that cylinder showing, caution. So I've been using this a lot more lately, and I want to kind of expand on how I've been using it. And Andy, brought this to my attention. He made a good point. Let's quickly look at the settings here for Extreme High-Low Pro. If we go to the up volume in green, the configurations are pretty aggressive. And they're aggressive in terms of the 1 minute volume at 1,000% and the 5 minute volume at 500%. And the same thing goes for the yellow, the downside ones. Well, I used the collaboration feature, which basically is right click and take this strategy and I'll collaborate that. And it's kind of like the cloud, copied all that code. And then when I went to my configure window to update it, here's the green data. So what do I want for my green data? Well, I could configure it naturally or make a change, or I could use the collaborate feature, which I'm not going to, and that's where I pasted it in. So I pasted in both the yellow colored downside and the green colored upside in collaboration data in the compare account window. And then, Andy pointed out, you're probably not getting as many returns as you'd like, and I agreed. On something like a compare account window, the more data we have, the better sample we get. And so, yes, David, good point. The compare account windows will reset And so I made very, very carefully sure not to allow this window, I'm going to cancel this, not to allow this window to leave my screen. And the way we do that is we right click and we pin it. Now that I've got a pin next to it, I could basically go to a channel bar. I'm going to lose all my other stuff here, but the compare count window will stay. And why is that important? Because when the compare count window leaves, and if I open it back up, I'm going to refresh, start from scratch, and lose all my historic data. So yes, David, I let this thing run from the opening bell, and about 15 minutes into the morning, I check into it and see what we got, which was odd. As I explained yesterday, this thing was just glaring red at me as the markets, were kind of making highs in the early morning yesterday. So getting back to Andy's point that I want to get as much data in here as possible to try and get a good reading, I modified it a little bit. So just so you guys know, if we go into configure, this is the up data. Well, I turned down those volume filters. Instead of 1 minute at 1,000, I left it at 300, or I put it to 300. Instead of volume 5 minutes at 500, I put 5-minute volume to 300. So I'm still getting stocks that are jumping off the page on 1 and 5-minute volume that are up 1% on the day and making new highs, but I'm getting more than would normally come through that particular scan window that that I built this from. And where did that scan window go? Did I lose it? Did I close out my Extreme High-Low Pro?
See if you minimized it.
I must have.
Must have, yeah.
So note to self, don't save layout when I close the program. And next time I open the program, I will have it. So I wanted to show you guys that because it really was giving me interesting conflicting signals yesterday on the buy side. When the euphoria was all on the buy side, momentum stocks were going down. And by the end of the day, kind of caught up to that sentiment. And then today was pretty much green in the driver's seat all day long in terms of the momentum stock. So it's an interesting tool, and I can share it if somebody wants. I'm going to unpin it so I don't get any duplicates. And if anybody wants it, I am going to share this. I'll just pop that into the chat window for GoToWebinar chat. And I'll call it a CC window, extreme volume. And there's the cloud code. So you guys can grab that cloud code by clicking on that link directly and then loading from cloud, and you'll have a copy of the same thing. But just remember, if you leave and go to a channel and come back, it's going to start over again. And really the value of these things are to try and let them marinate and run all day long so you can get the best data sample possible. All right. Where I want to go next is, what is working in this market? Well, bouncers is something that's kind of been around and it's been on my screen for a while, and I point newer traders who don't want to chase a lot of volatility or low floats or high momentum. These are the kind of trades that can work really nicely. Here's a perfect example. Okay, let's look at the daily chart. I'm going to draw a line at yesterday's low, just so you get a feel for what this scan is looking for. So there's yesterday's low, and today we trade below that low. Let's go to the intraday. Gap up, and then took out yesterday's low, consolidated, went to a new low, and then fought our way back through yesterday's low, and all of the special sauce and stuff going on with filters and algorithms on the event. In this particular case, it's called crossing back above resistance. The trigger was right there at that level, and for the remainder of the day, it kind of just gravitated higher. And in my experience, typically these can be good for just a decent 45-minute. I mean, right there on the signal candle, there's 1, 2, 3, 45 minutes. That's about the best it got. And so it's just taking advantage of the in-breath and the out-breath of individual stocks. For the in-breath and the out-breath of individual stocks. And we can try and time the jump rope using this particular scan for that. Yeah, Claudina, this is probably one of the better scans for a newer trader to consider, because I'm showing it's not a lot of volatility. It's just taking out yesterday's lows and then letting it work for 45 minutes to an hour, and that's it. It's not a huge volatility run. It's just taking advantage of timing the jump rope. And as far, Claudina, as the AI goes, I would pay attention to some of the bigger picture items from 30,000 feet. Is it all long? Is it all short? Is it looking at certain sectors? But still, what I was saying earlier is you don't just want to blindly pull these up and then just jump into them. These are still presented to us for a reason, for traders to look at them and decide if it meets, the kind of criteria that we're working on and honing in as our skill set. So getting back to bouncers here, once we kind of know what it's looking for, It's time to optimize this guy again. And I did it a week ago, so I kind of know where we're going with this, but if you didn't attend when I did this, well, you probably didn't because it was during one of the Trade Ideas University sessions. So here's what we're going to do. We're going to take this scan that looks for a nice 45-minute to 60-minute hold of stocks, taking out yesterday's lows and then bouncing right back up into the range. And can we benefit from that? Well, this one's called Bouncers Raw because I don't have a whole lot. Oh, this one is Bouncers Optimized. What do you know? Interesting. Let's quickly run this and then see what we got, because I have a feeling this one's been already optimized. Whoops. But I know how to go back and kind of retrace my steps. Yeah, I bet you this one is already optimized.
Nope.
Or maybe not. Oh, it does say Bouncers Raw now that I look at it.
No, it says Bouncers optimized.
Okay, so we're not getting a whole lot of good stuff there. What's going on? Well, let's go into the optimization tab. And the first thing I want to look at is the price. Okay, well, it appears that everything under $19 is not giving me good returns. 188 trades we don't want. So I'm going to go ahead and right click and set the minimum price now to 20. Oh, you know what? Let me just do something here real quick. If I run this again, how far back did we go? Yeah, I want to go back 25 or 30 days. Let's just leave it at 25. We're testing the volatility that we've had that we all know and love and have seen on there. So let's right click and set the minimum value at 20, which we did. Maximum value is currently at 300, but look, above 199, we're getting some diminishing returns. So I think we better make our maximum value 199. There we go. All right, the second thing we're going to do before we do a deep dive is the time of day. Oh boy, that's about as pretty as a steak would come. I like to use the analogy of we're going to cut the fat off of a nice, red meat steak and be left with the good stuff. And it's pretty easy to see. We don't need to make an adjustment here. We're just going to know that when we rerun this, 8:30 is my time. That's when I'm going to want to start it, and I'm going to take it all the way into, looks like 9:09. Seems to be the sweet spot. So not a big window of opportunity. We could actually go to 8:20 if we wanted to, but I'm going to go to 8:30 and really try and optimize this. So less than an hour, this is the window of opportunity. So let's run this again directly from the changes that we made. And let's change this to 8:30. And let's bring this one down to only 9:09. So it's a real tight window lately that seems to be working with this one. Go ahead and run that again. And we only did two changes. The amount of trades, the price of the instrument and the time of day. And this is what we did. We cut out a lot of the fat. We had 670 trades. We cut it down to almost 200. We went from a profit factor of 1.2 to well over 3.2. Very interesting. Let me look at some of the configurations here and see, because this, maybe not. I don't see any optimizations. You know how you know something's been optimized, guys? The 99s, that's kind of a trick. The 99.99, that means somebody's come through there and optimized this. All right, so there's a couple things in here I want to look at. Two of them in particular is what was the S&P doing on the day? And the other was, where was the price in relation to VWAP? I think with just those two optimization changes, we might be able to actually improve on this. So let's go ahead and go to Optimize. And here is the Other Filters channel. Here's where we want to go. First thing I want to do is change in the S&P. So let's find that. Change in the S&P. Here it is, S&P change today. What is the market doing today? Not 5 minutes, 30 or 15, but what is the net change on the day? So I click that. Now we have a heat map looking at what was the S&P doing. Here's a great example of some red standing between some green and red. Well, over here on the right, we have 4 trades plus 2. That's only 6 trades in the green, but we would have to not take these out to get to those, whereas we got 22 trades over here in the red. And this means that at negative 0.8, so if the S&P was down a minimum of negative 0.8 for the day, this particular column is okay and acceptable. And it looks like it's okay and acceptable all the way up to 199. So I'm going to go ahead and make this change right here. We're going to right click and set the S&P change to be no more than negative 0.8% on the day. That's our threshold to the downside. and then our threshold to the upside, I'm going to take it all the way to the max here, 1.99. We'll pop that in there. That's the first of two optimizations I would like to do here. The second, which I've always seemed to find some good stuff, is VWAP. How far away is the price from the VWAP, the value weighted average price, just as a marker? And I think it's under change from VWAP. Let's see here, or distance from VWAP. There it is, distance from VWAP percent. Okay, not seeing a whole lot of red. We got 5 trades that aren't doing us any good there. So, you know, for the most part, this looks pretty good. We're just going to cut out that bottom part. We're going to say that this is our minimum value from VWAP. Can't be more than -1. And on the upside, we got pretty much clear sailing except for right here, just these 2 trades. Well, let's go ahead and cap it off anyway, just for the fun of it. So we have a bracket in VWAP. The VWAP, the distance from the VWAP of the current price cannot be more than -1 and cannot be more than a +2 on the positive side. So 2 big changes were made using optimization. Let's see what we get when we run it again and compare it. And again, I like to point newer traders towards this particular strategy because it's a slow evolving strategy. Well, there it is. You know, for the most part, it looks like it's been doing really well. The second half of that 25-day sample, but kind of flat for the most part on the first day. But the good news is this is the most recent data showing us a nice up spike. We're up to 4.4 in the profit factor, 66 win percentage. Average winner is 35 cents, average loser is 15 cents. Well, just for the fun of it, what if we ran it again and did a hold time of not 45 minutes, but maybe an hour and a half? We'll do 90 minutes. Just starting to placate my own curiosity here. Oh, not as good. Look at that. So that's why I say this is kind of a quick hit, 30-minute, 45-minute, time the jump rope type of strategy, and that's what you could expect. So one more thing before I go or leave this topic is what was the running parameters? 8:30, and then we want to stop it at 9:09. So that's 2 hours after the open, and then that would be 2.5 plus another 10. So we add 40 minutes to that. Well, the reason I'm asking is, guys, we know now that this is the optimized window of opportunity, the local period, local time that I had. Let's go in, and if I've got that filter, it's called time of day, we can make sure that we don't see any alerts outside of that window. There it is, time of day. Well, it was once 30, but based on our most recent back test, we know it's now 2 hours. So we're now not going to see any alerts until 120 minutes after the bell. And then that was good for about 40 minutes or so, we'll say. So we'll add 40 and we'll say we'll stop seeing this alert at 160 minutes after the open. And so that is basically doing the work for you, so you don't have to go in and memorize, you know, what was this sweet window of opportunity that we had here on that bouncer scan that Steve optimized. So there is the optimized version. I'm going to definitely save that to my cloud. And I'll go ahead and save and share that for anybody that wants it. I will drop it right into the chat window. Copy and chat window. Bouncers optimized. I'll put the date in there, 4/10/18, and paste. And for anybody who's not aware, if you click that link directly, it takes you right to the cloud page. There it is, Bouncers raw optimized. Just copy the code from that browser, like so, and then file load from cloud, and you'll have it. It's preloaded right there in that window. Click load, and there it is. There's my duplicate copy. So I just wanted to remind y'all that, you know, you got to stay on top of these scans. Things are always changing, especially when we look at the general market out there. You know, that's why I just decided to sample, you know, 30 days or so to try and get a lot of this volatility to see how well that's been doing. All right, thank you, friend, for the feedback. We got about 4 or 5 minutes here. As promised, if you want, you know, we can look at 4 or 5 charts, give you our interpretation of where it might be going, where the downside risk is. So go ahead and throw those in there in the window. We'll take the first 4 or 5. Chris is always on the ball, and I like the way he qualified it. He said he's looking for a scalp tomorrow. It's nice to know if you're long today, or if you're short today, or if you're thinking about getting long or thinking about getting short. That always kind of helps. So SND is our first request. All right, I kind of like it's looking kind of trend changey here. one of the first things I'll do is see, is there a short float? I don't see a short float value in there, so I'm not quite sure about that. You know, it's trying to break a trend. I mean, what I could do here is probably show you what I see, and this is probably what Andy sees too. And here we go with the trend line tool, Andy.
Mm-hmm.
Maybe I'll do it in record time today.
Trying to break that trend.
It's trying to break that trend. So there's our trend line, and this is the end of it right here as I pull it down through. So that's a plus. Basically, you broke a downtrend. It would be nice to know if there was a short float on this. For whatever reason, we don't have any data, but if the short's getting nervous that the trend was broken, well, you could see a nice little pop. I would say right up to this level right there, your upside is probably going to be limited, Chris, to about what we call that, just over $7, 7.10, 7.11, as we run into support from prior support. Yeah, you know, there's a little bit of room there. It could work. It broke the trend, you know, pretty nicely. Definitely put it in your watch list. Keep an eye on it and pray for relative volume above 1.0, and monitor the 5-minute and the 1-minute volumes too if it goes to highs. All right, the next one is Shop. Is that right? Shop went offline. So whoever you were that wanted Shop, you went offline. So you miss out. LGCY is the next one, and long at 487. John. All right. I like the way it's coming out of congestion here, and it's doing so pretty much right where you got long.
Definitely relative strength.
It's showing some good relative strength today. What is this? Natural gas, huh? Well, natural gas. What's natural gas ETF doing? There you go. That's why you had a good day today. I would keep it one eye on USO, John, and the other eye on your trade. And your trade, the downside, if I could type, again, your entry is 487. You know, I'd hate to see this gap filled. If that gap gets filled, it theoretically should bounce. Otherwise, if it takes out that low, I probably wouldn't want to stick around. I don't know what your thoughts might be, Andy.
Yeah, well, right now you're battling with a very, very critical 5 level. I would really want it to, you know, stay above that 5. They have a tendency, if they can't hold that $5 level, they will sell off, you know, pretty quickly. So you see it trying to battle that line. So, but Steve's right. I mean, I'm not saying leave your stop at 5, but typically it's such an important psychological number at 5. I mean, it gets above 5 now. Mutual funds and hedge funds and everything start getting involved. But
yeah,
that
that's
gap
a good line is there, and their gap has probably not gone unnoticed to the algos and those that program the algos. So that would be your downside. But keep one eye on UNG. And Chris came back and showed us that SND does in fact have a high short float of looks like about 23%. Let's see, is that right? 6 days to cover, shares, 21 million. I guess that's about right. So there is a short float contingency back on that SND, which could help, you know, propel you higher as well. All right, anybody else want to weigh in? I got time for one more. All right, John wants to see EC. All right, Echo Petrol, also natural gas. So having a nice gap up today along with UNG. What did I do before I did USO?
You did USO,
oh my God, yeah, I confused myself. Okay, yep. Sorry guys, natural gas is UNG. Forget what I said about keeping one eye on USO.
Well, these may be some sort of specialty companies like extraction or some kind of conversion company or something like that. I don't know. I don't know enough about them, but I don't trade a lot of
sorry about that.
gas stocks.
So back to your question, EC is definitely in a nice trend. And what do we have back here? We've got definite. Hopefully you look back and you saw that that's going to be a level of interest for sure. The 52-week high defenders will probably defend that level with all they got. So, you know, there's a little bit of wiggle room between there and where we are today. The narrow range day basically was coming off of a nice move yesterday. They got caught up in the close and then just a gap up and sideways. Typically when I see a narrow range little spinning island doji like that, you know, the only thing you really can go off of is the high and the low of that particular day. So looking back at yesterday's range, you know, if it takes out the high end, that's a good thing, because these little dojis after a breakout, you know, can be considered kind of like a day of rest. And that was one of the reasons I got kind of bearish on Monday with that same scenario right here. I called it an island reversal. We gapped up into the doji, and I said, pay attention to what direction we take out the next day, the high or the low of this little spinning doji, and we took out the low. And so it started to look like what they would call an island reversal, where your gap doji is actually the anchor for the reversal, either to the upside or the downside. But I'm not really seeing anything that's super compelling other than just watch today's range. If it takes out the lows of today's range, you know, it could drop right back in.
It's got a nice trend. You might want, if you're long it, I would want it to hold that trend line going back to early last month.
I'd want it to hold these 10-period moving averages too.
That's pretty. That's right there with the trend. Yeah.
And almost yesterday. So that 10-period moving average is really your line in the sand for a swing trade. But if you're more, fast time frame, less risk management, I would just key off the high of today's doji and the low, and use that directional momentum as an early indicator. Hopefully it works. All right, thanks Chris, thanks you John, thanks for the people that hung around to the bitter end. I'm going to bring in Scott again to talk about a few things that are of interest that are definitely coming up. So come on in, Scott. Whoops. I'm not trying to share it, I'm trying to present it. All right.
My mute button, thank you.
There you go.
Yeah, so there's a test drive coming up. These have always been popular. This is the spring test drive. This is your chance to try out Trade Ideas Premium for 5 days. If you're a standard subscriber or not yet a subscriber, it has a low $8.88 buy-in point to cover all your data and extra support for that week. Go ahead and sign up. If you sign up in advance of the April 16th start, you're going to be able to attend all the special event webinars we have that week. We still allow registration through April 18th, though, so if you have some friends that are stragglers, they will still get 5 days and continue through the next week after that. Just go to trade-ideas.com/test drive, sign up, and you'll be ready to go. People who are signed up in advance before April 16th get early access over that weekend. So if you sign up before Friday's close, you'll get turned on Friday afternoon after the close, and you'll be able to test out all the back testing, get familiar with the Holly channel, all of that stuff over the weekend, so that you can be really productive on April 16th in that week. Again, trade-ideas.com/test drive. Go ahead and sign up. We've also got podcasts. There's going to be a new one this week on Friday. They come out every Friday. We did skip a couple last week because we had employees on holiday. But just search for Trade Ideas Podcast in the app you use to listen to podcasts in. It'll show right up. Click on subscribe. Then you'll get the new one. You can also go back and listen to previous episodes. Michael Noss was, I believe, on a special guest on the last episode that we did, so you can go check that one out. He's talking about automated trading, all kinds of good stuff. We have a book Steve talked about earlier. It deals with the way the market's behaving now, so get that book. Just go to the URL, trade-ideas.com/ebook, plug in your email address, and that'll get delivered to you. We also have a code, Spring Savings. If you decide to become a full member or a standard member today, just use Spring Savings. It's good this month. Say it's 15% off your first month or year of premium or standard, and you can download this slide and some of the other handouts by going to your handouts panel, expanding it, and clicking on the blue PDF link. Any questions, just email us, info@trade-ideas.com, or you can shoot Steve a question, Steve at, Andy is Andy at. Steve is Today Trader on Twitter. Also follow at Trade Ideas 1 and Trade Ideas. Find us on Facebook, Trade Ideas Pro, and share everything we post with your friends, because that's what that one's for. Thanks all. We'll have a recording up later on tonight or tomorrow. You get an email follow-up with that info. Thanks, Steve. Thanks, Andy.
You're welcome. Thanks, guys. We'll see you all next time.
Thanks, everybody. See you on Thursday.
Thanks all.